Cramer. Welcome to Mad Money. Welcome to Cramerica. Other my friends, I'm just trying to save you a little money. My job is not just to entertain, but to explain how days like today happen. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Every day around here, we have a referendum on stocks. And you can't let it get you down, because tomorrow's vote can always be different from today's. Yep, the voting booth never closes around here, so you get days where the bears turn out in droves. Dow shedding 115 points, S&P dipping 0.39%, NASDAQ losing 0.38%. Why is it like this? Why do stocks even gyrate so wildly when nothing's really happening? Well, the answer is a mischievous one. On most days, stocks react to other stocks or the overall stock market, and the market itself tends to react to the gyrations of its much larger sibling, the bond market. The bond market certainly colored today's stock market, which reacted negatively to every tick down in bond prices, because lower bond prices mean higher interest rates. When rates go higher, the bears almost always win the daily election. Take the stock of Home Depot, which reported this morning. That's somebody, we all know the orange roof, right? This will really help you to understand. At first, that stock rallied hard. At one point, it was up almost 14 points in pre-market trading. Ooh, I like that. The trust owns it. The gains shrunk to the single digits during the 9 a.m. conference call, even as the call was quite upbeat, as you'll hear later in the show. But as interest rates went up over the inability for Congress to find spending cuts, the stock wilted. Ultimately, it finished the day in the red. Makes sense? Well, then, kind of. You see, Home Depot does best when there's strong housing turnover, which means higher rates are bad for business because they inhibit turnover. So the Home Depot referendum rigged by the bond market then turned negative, and the most important stock of the day lost the vote. That crushed a host of retailers. Some had to do with housing, others didn't. Of course, it didn't matter if there was a real connection. They might be joined together by an ETF or simply by the zeitgeist that stems from Home Depot's importance in the retail firmament. Now, I don't want you to worry too much, because there'll be another election tomorrow when Lowe's reports. There's always another election these days because there are so many companies that matter to the overall market, and because the bond market never stops moving. And if Congress passes this huge tax cut, which I think it actually will, the bond market will be moving against us. The cut in the end will not make up for the pain of higher interest rates and what they can do to your pocketbook and the economy. Does it have to be this way? That's a great question. On the eve of tomorrow's noon CNBC Investing Club meeting, let me give you my answer. Some stocks are more hostage to the bond market than others. Stocks related to the fickle consumer are controlled by the bond market. For them, the daily referendum can get pretty wild. When rates go higher, the voters, big institutional money managers, have been electing the dollar stores, betting that times will turn grim with rates going higher, and those stocks do well when the consumer is hard-pressed. Dollar General stock rallied 4% today despite Home Depot going down. Did it deserve to? It doesn't matter, because we won't know how it's doing until the cut reports on June 3rd, which is light years away. It's just, it fits the rate paradigm, that's all. Bank stocks tend to rise and fall with the bond market, too, because when rates go higher, you usually get less economic activity. Banks need a stable environment to get deals done. Again, the bond market's in control here. Some real bargains are developing in the banks, but they're hard to pin down while interest rates are jogging higher. But then there are stocks and sectors that have no real connection to the bond market, and these are what I want to talk about for a second. These stocks are controlled by what I call powerful secular themes, so powerful that bonds simply they can't bring it down. Right now, I'm feeling bearish in the bond market, so these secular growth stocks are kind of what I want to bet on. It's what I'm focusing on my talk tomorrow if you join the club. So let me give you an example of what's not up for election. What can override the daily plebiscite? Boy, these stocks are not easy to find right now, but when you do, you got to hold on to them for dear life. At a time like this, when Congress is trying to come up with a budget, we're going to have to endure many suboptimal days where we have to expect upsets and reversals and defeats, but they will be nothing but distractions. See, it's an okay time, not bad, not great. And there are plenty of stocks that can power through if they have secular themes pushing them. It's a little harder to find these winners, given how much we've already run from the bottom, though. So I'm going to give you a textbook one so you know exactly what I'm talking about, because it's so visible. We're going to talk about the stock of GE Vernova. That's the power division that was spun off from the old General Electric that so many of you like. Right now, we've got several huge themes occurring at once. We know that we have a gigantic number of data centers being put up in the country, correct? Now, they require a tremendous amount of electricity. They're big drainers. Our most abundant source of power comes from burning of natural gas. We got more natural gas than any other country. GE Vernova makes the turbines. Those are huge machines, up to 700,000 pounds, that burn the natural gas, which then generate the electricity. Now, there's the theme for you, but that's not all. Today, the Tennessee Valley Authority, remember them, announced that it's going to submit a construction permit for a small modular nuclear reactor. Again, because we need more power for the data centers. Who makes those? GE Vernova. And we know that the Empire offshore wind project off the coast of New York just got green-lighted by the Trump administration. According to a 2022 press release, GE Vernova will be responsible for designing and building the high-voltage electrical system connected to this. It's a huge multi-year project that will be fantastic for, yes, GE Vernova. Oh, and if you are a country with a trade surplus with the U.S., the best way to get it down and then, lose the ire of the president, get rid of the wrath, well, it's always been to buy a Boeing plane. But I don't think that works as much anymore. You know what you got to do? You got to buy a turbine from GE Vernova. It takes a lot to buck the bomb voters, but GE Vernova has not one, not two, not three, but 4 secular trends going for it. That's what you need. That's belt suspenders and then belt again. Or take the stock of Tesla, which I like here. Today, my colleague David Faber interviewed Elon. He crushed it. I don't know if you caught it. Elon Musk, the man behind Tesla. I'm very proud of David. He's my partner. Musk reminded us that his machines will soon be on the road driving autonomously, 1 million of them, and the numbers have gotten better for the traditional business. Now, the latter, it can be verified. The former sound a little bit like the hubris talking. Still, that kind of thing can allow Tesla to buck the bond market. Now, unfortunately, at the very moment the bonds are so in charge that Tesla stock could only go up while David was asking Musk positive questions about the business. The stock would go down when David talked about Musk's government work and the impact it might have on car sales. Still, it managed to finish the session up a buck and change. I guess that's a victory. But I think it would have been up quite a bit if we had a more benign backdrop of bonds. Boy, this bond market, what a tough opponent. So here's the bottom line. The good news is that rates can also go up and not just down by the time we get a budget deal. The bad news is that rates are threatening to break out to the upside. And if they can't stay calm, if they jump to a new higher level while Congress works on the budget bill, we're liable to have more days like today, where you need a plethora of positive themes for any given stock to break free from the gravitational pull of these darn miserable treasuries. I need to go to SPARS in California. SPARS.
Booyah, Jimmy Ski. First time, long time from sunny SoCal.
Nice. Glad you called in. What's going on?
I wanted to shout out to Mama, if you would. She's hanging out in Westlake Village, and she had a question.
Sure. Let's do that.
Pin action on ARM. You think with all the changes we're going to see anything go on there?
Look, I think that the pin action on ARM, look, we got ARM out there. AMD starting to feel a little better. We know NVIDIA's there. But I am going to give you a little curveball here. I think that Broadcom, which went down really hard, is the one that I think can go up. It was up today. At one point, I was thinking about maybe I had to do a little ka-ching, ka-ching. But Jeff Marks, my partner, I think he feels otherwise, and I'm going to go with him. I need to go to Greg in my home state of New Jersey. Greg.
Booyah, Jim, Greg in Union County.
Good to have you down the block from me. You're down the block from me. I like that.
I know. My question is, I love the dividend stocks now that I'm 68, and I'm slowly buying some, but I need a food group. And I think that Wendy's is attractive and has a good dividend. What are your thoughts?
Well, I'm going to go against you because they cut it, okay? And you know what? Once a dividend gets cut, I don't then go seeking to see if they're going to hope that things are fine now. I didn't like that last quarter was not so good. Look, everybody knows that my wife loves Wendy's. She loves Wendy's, but that's not enough to buy the stock. All right, anyway. If rates keep moving higher, we're going to have more days like today where it looks real good and then it goes bad, and the president's got to be careful. We don't want him saying we want the biggest tax ever. Just make it so that we're doing okay in the country and we'll be happy. On Mad Money tonight, Palo Alto's on the move after earnings and not in the direction I like since my trust owns it. Then, could Home Depot build higher after what I just talked about? I don't know. I'm digging in even deeper so you get what's really going on. Plus, could Wyndham Hotel and Resorts be your ticket to the travel sector? We haven't had them on the show in ages. I'm going to talk to the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.